Galane Gold is an unhedged gold producer and explorer with mining operations and exploration tenements in Botswana and South Africa. Galane Gold's management team is comprised of senior mining professionals with extensive experience in managing mining, processing operations, and large-scale exploration programs. Galane Gold is committed to operating at world-class standards and is focused on the safety of its employees, respecting the environment, and contributing to the communities in which it operates. Galane Gold trades on the TSX Venture under the ticker GG.
I'm joined now by Ravi Sood, Executive Chairman of Galane Gold. Ravi, welcome back.
Pleasure to be here, James.
Ravi, gold has been performing very well. It's it's in an uptrend over the last 10 years for sure, if not over the last 20. Galane Gold is emulating that. You've made some great announcements. You've got this joint venture with B2 Gold. You've reorganized your debt payments. Give me an overview and an update of what's going on in Galane.
Yeah, look, we've spent Galane's been around for 8 years now, and we've spent much of that time battling a declining gold price environment. And as a junior producer, that's obviously a challenge. No access to capital and very much reliant on our cash flows, which are of course directly tied to gold price. So we spent a lot of that time really just keeping the company moving forward and advancing our core operation, our producing mine in Botswana, and putting back into production a mine that we acquired in South Africa. And we've managed to successfully do that now, and it's ramping up its production. But now we can go into a different mode, if I'll call it that, with rising gold prices. At the same time that we have increased production and lower production costs, we find ourselves quickly paying off our debt, the debt that really helped us advance those projects and keep the company moving forward during those leaner years, and start to look at new opportunities. But two really key things that we've done in the last week, or that have occurred in the last week, we extended a bit of debt that we had. It was due in November. We prepaid about a third of it a few months early. We found ourselves in a surprisingly positive cash flow position with these higher commodity prices, of course, and extended it for 2 more years. It's very low cost of capital for us. It's 4% interest, convertible at 100% premium to the market. So very good extension there, very good for freeing up cash flow for other opportunities. Second thing, a very exciting thing that we announced last night was about a year or so ago, we struck a deal with B2 Gold. As a producer, we have mining licenses and prospecting licenses. And of course, we're focused on our mining operation and extending that operation. And our team's very much oriented to it, near mine drilling and geologists focused on extending mine life. Whereas B2 Gold has a much broader team, huge resources to bear, and they took a lot of interest in our prospecting licenses surrounding our mines. And so we did a deal where they could earn into 70% ownership on those prospecting licenses over a period of 3 years against a $4 million expenditure. And we found out this week that they had given the green light to move ahead to phase 2, another $2 million expenditure, and moving that JV forward, which is outstanding news for us. Hopefully they find something big, but if they find anything, it's all positive for us.
Looking at the chart of the price of gold here, there's a lot of sort of geopolitical reasons for gold to be moving forward. Certainly the proliferation of negative yielding government debt has got to be foremost among them, a phenomenon that markets have never had to deal with before. And that trend seems to be tied to general global economic fortunes, which are, by all accounts, becoming tougher and deteriorating, essentially a perfect storm for the gold price. And so from where you sit as a bit of a macroeconomist, besides just the executive chairman of a gold company, do you see that trend intact over the next 5 to 10 years?
It's in fact, this trend has started years ago. And a lot of us would question whether we really ever came out of the financial crisis from 2008. The negative yielding bonds, I think, yeah, of course, that's a driver for assets like gold, which don't have a positive carry to it. So you always had an opportunity cost to holding something with no yield when you could get a yield from another risk-free asset like treasuries or other government securities. So yeah, but I look at that as more of a symptom or an effect, not the cause of the move in gold. The real cause is, as you described, a change in narrative. In my eyes, we've seen a deterioration in the economy. All the signs have been there for many years. Really, the recovery, if you want to call it that, has been driven by debt. and we've seen the velocity of money crumple. We've seen the effect of each marginal dollar of government borrowing and fuel they throw on the fire have less and less effect. And the narrative is now changing. So those facts and those fundamentals have been there for years. But of course, the flow of funds and pricing in markets are driven by what the prevailing view of those assets are and what the prevailing view, in this case, of the economy and the economy's prospects. And now that narrative's really started to change. And I think the rate of that change is going to accelerate. And yeah, that's something that we're going to realize and become a lot more of a mainstream narrative over the coming years. I think as somebody involved in the junior gold sector for many years and other ventures, just talking to other investors around the world, yeah, you start to see some interest now perking up for gold. But given that it's moved $200, almost $300, it's amazing how little participation there is in the sector yet. It's almost nothing. We're coming off zero and we've barely moved. So this is something that's going to extend over many years, and we're just getting started in it. And the fundamentals have been there for years. We're just starting to see that creep into a mainstream narrative.
Right. How does that acceleration in the gold price affect the acceleration of Galane Gold's plans in terms of building out more production and the launch of the second mine?
It benefits everybody in the gold sector. Obviously, the sentiment changes and the capital markets view changes, and we start funding things that we would never have thought of even a year ago. But for a producer, and particularly a producer like us, a small producer that has several forms of leverage that in the bad times work against us and in the good times work in a huge way for us. Financial leverage. I know as gold was declining and investors looking at us and saying, well, they have some debt, that's going to be a problem. How are they going to raise money if they have to? Well, on the way up, that's a torque for your equity. And it becomes very clear to see how that debt gets paid off very quickly.
Becomes a moot point, really.
Being on the higher end of the cost curve, and our new mine will start to lower us, but we're not going to be a low-cost producer by traditional metrics. That hurts us more in a declining gold price environment, but it has a profoundly positive effect in a rising gold price environment. So every incremental $100 is a huge impact on us. I think our market cap now is about 20 million Canadian dollars. This year we should produce about 36,000 ounces. We did 36,000 ounces last year. Next year, as our second mine continues its ramp up, we forecast around 50,000 ounces. So you can see the impact of $100 on gold impacts our revenue by this year $3.6 million US, going to $5 million next year. And there's no incremental cost associated to that. Of course, a bit more in royalty and eventually taxes, but not in operating costs, no additional capex. That's all falls to the bottom line. And if you're talking about having an impact of $3 and $4 and $5 million US per $100 on gold for a company that has a 20 million Canadian dollar market cap, it makes a big difference. And we're not alone in that. Other junior producers are certainly in the same boat and I think represent a great opportunity for investors right now.
You bet. All right, Ravi, that's a great update. Let's leave it there for now. We'll come back to you in due course. Thanks for joining me again.
Always a pleasure. Thank you, James.
Brilliant.